So welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals. And we're making a start here with EUR/USD. We're having on your screens the EUR/USD 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. On a fundamental level, I think that let's make a start with the US data first. Okay, attention this week is shifting, and USD traders are going to be increasingly watching the release of the US CPI rates on Tuesday, day for October. A possible slowdown could weaken the US dollar, as that would more or less imply that inflationary pressures in the US economy are still on the retreat, and that could solidify the market's expectations for the Fed to remain on hold, not to proceed with any more rate hikes, despite some hawkish comments which were made by Fed Chairman Powell last week. On the flip side, the Europeans, I think, are far more convinced, and the ECB's rhetoric has excluded the possibility of further rate hikes for the time being, practically. Okay, they haven't done that literally, but the wording and the tone of ECB officials tend to lean more towards current rates remaining steady, yet for a prolonged period of time. And actually, that may have some influence more or less on the euro side somewhat. I would expect that, okay, we have some interesting financial releases this week. We have, say, for example, the revised GDP rate of the Eurozone or the final HICP rate of the Eurozone, which could be of interest. However, there's little change, if any, expected from the preliminary release. And given that the preliminary release may have already absorbed most of the market's reaction, we may see the interest decreasing on those releases as such. I would be placing more weight, okay, as for financial data, on German CEF indicators. They're for November, a little bit more forward-looking. But I think that the common currency is going to be more led by fundamentals rather than financial releases as such. Mind you that we may see the euro easing and allowing for other currencies to take the initiative, especially against the US dollar. Now, on a technical level, let me clear this a little bit here. And we're getting then a better view. Now, EUR/USD, in our opinion, has remained in a sideways motion after breaking the downward trend line guiding it. Let's zoom in a little bit here. I think that's better. And despite bouncing on the 1.0678, actually the bounce verified the significance of the S1. We do not see the pair being able to substantially rise. Okay, it has gained a few points, a few pips, but overall remained in a rather sideways motion. That's also evident by the RSI indicator, which tends to remain currently just above the reading of 52. So that tends to imply a rather indecisive market, which could allow exactly the sideways motion to continue. Also note how the Bollinger Bands have narrowed, and that's since late Thursday. Let's check that. Yep, right here. And more or less tend to imply low volatility, which could, in our opinion, also provide some stability for the pair and allowed it for the sideways motion to continue. On the other hand, should the bulls take over, I would require the pair to rise, break the R1. I would require a higher peak than this one. And for bullish outlook, we have to see the pair breaking the R1 and start aiming for the R2 1.0863. On the other hand, should the bears take over, we may see the price action dropping, breaking the S1 1.0678 and start aiming for the 1.0575. Mind you that volume for the time being seems to be a little bit lower, but overall remains rather steady. So there isn't much here. So the main scenario is for the pair to remain in a sideways motion for the time being. Let's have a look at the next pair. Give me a sec. Unlocking taskbar. Yep. However, I can't. Give me a sec. Moving now to cable. There you go. We can see cable also maintaining a sideways motion. That's pretty clear. And at this point though, sorry, allow me to widen this a little bit. And we have to correct the labels. There you go. So starting with the S3, which is now being placed at 1.1925. That's clear. The S2 at 1.2065. The S1 at 1.2190. The R1 at 1.2305. Let's verify that. Yep. The R2 at 1.2465. And the R3 at 1.2645. So we're practically set. Allow me to clear also a little bit labels. The interesting element here is the following. See this peak here? Then we have a lower peak and it has just broken the downward trend line. We had an intense downward motion, which, allow me to zoom in, which seems to be broken during today's European session. Even if we correct it a little bit further, it becomes a little bit more evident here. So for the time being, we tend to highlight exactly the interruption of the downward motion. That seems to be also supported by the RSI indicator, which has risen and has reached just below the reading of 5th. It's actually at 46.9, 47, implying that the bearish sentiment of the market for the pair has eased. And now the market is in search of the direction of the pair's next leg. We switch our bearish outlook, and for the time being, we highlight the possibility of a sideways motion, possibly between the 1.2190 and the 1.2305. Mind you that the RSI indicator has narrowed, that the Bollinger Bands have narrowed as well, also implying the possibility of a sideways motion, or if you prefer, lower volatility, which could allow the sideways motion to continue. Now, should the bears take renewed control over the pair, we definitely would require a lower control than this one. So the pair has to drop, break the S1 1.2190, and we note as the next possible target for the bears the S2 1.2065, a level which provided support beautifully here. Note how it had reversed the downward motion. Now, should the bulls take over, I would expect the pair to rise, break the R1 1.2305, and start aiming for the 1.2465. Now, we have covered already any US data coming up. I would be concentrating on cable on the GBP side of the pair as well. And I'm highlighting the GBP side as we have practically a shift of pound traders' attention from fundamentals more towards financial data. We note that on the monetary level, BOE seems to be solidifying its stance that it will remain on hold. And the struggle within the dynamics within the bank are shifting towards that direction. And that may be weighing somewhat on the pound. In the coming days, I'm highlighting definitely the release of the US employment data tomorrow. Therefore, September, we get also some data, the claimant count, which is for October. Overall, the situation regarding the UK employment market seems to be worsening or is expected to worsen somewhat, which, okay, the unemployment rate is expected to remain unchanged at 4.2%, but the employment change figure is expected to drop deep into the negatives. And that could weigh on the pound. I would be also highlighting on Wednesday the release of the UK CPI rates. They are for October. A substantial slowdown of inflationary pressures is expected. And if that's the case, we may see actually the pound weakening, as that would once again solidify the market's view that BOE will be remaining on hold. Maybe for a prolonged period, but that's the end of the road for rate hikes. The question arises here is what would happen should the CPI rates not slow down as much as expected, or in case of a total surprise of the market where the CPI rates accelerate for October. That could provide a substantial boost for the pound, as that would reopen practically the discussion table about more rate hikes to come or not. For the time being, once again, we tend to maintain a bias for a sideways motion on a technical basis, probably between the R1 1.2305 and the S1 1.2990. Let's have a look at USD JPY. Here you go. This is a very, very interesting pair. Now we see that, let's zoom in a little bit here. We see that USD JPY has slowed down its ascent, yeah, but it continues. It's characteristic how the upward trend line was shifted to the right. In my opinion, definitely we have to switch the role of the R1 and turn it into support line. And let's drill into the daily chart. Let's go back. Let's see how back it allows us to go. We have reached 2017, 2006, sorry, 15. 2014, that's not enough. Let's add more data, past data. We're looking for USD JPY. Download. Allow it to work. That would allow us practically what we're doing right now, will allow us to get more data in the past and thus extract a more valid resistance line. Practically USD JPY, as it downloads, let me talk a little bit about the fundamentals, especially about JPY. Now, JPY has been weakening for a while now, and definitely the major factor behind JPY's weakening is BOJ stance. The bank is ultra dovish, and that allows practically the interest rate differentials to enhance carry trade against JPY, especially with the US dollar. Now, we had a release today from Japan. It was the corporate goods prices growth rate. It was for October. It was expected to get out of the negatives and get into stagnation levels at 0. It didn't. It contracted even deeper on a month-to-month basis, remaining in the negatives. And that tended to highlight deflationary pressures within Japan as such. I would expect that such readings in inflation metrics, such as the PPI and the CPI, are going to be enhancing the dovishness of the bank, of BOJ, and that could continue to weigh on the Japanese yen. The big question here, though, is whether the Japanese government will actually be intervening in the markets or not in order to support the Japanese currency. Under similar circumstances in the past, it had done so. Even we had some warnings from Japan's finance minister, Mr. Suzuki, practically towards sellers of JPY to stop shortening the Japanese currency. The big question here, though, is whether we're going to be seeing, let's re-echo, whether we're going to be seeing the Japanese government actually intervening in the markets. And the main reason why I'm putting this question mark is in the past, the Japanese government had done so, albeit it did not admit it. But the Japanese currency once again weakened. So the effect was only temporary. And that's understandable in the sense that practically from the moment that the main fundamental reason behind the weakening of the JPY is still present, even a push higher for JPY from the Japanese government doesn't have no fundamental reason to continue. So practically, once again, I would expect any effect to be of temporary nature. Now, I would also be noting another development regarding Japanese politics. We had Japan's deputy finance minister being forced to resign. And the main reason behind it, the main reason behind it seems that there was a scandal where his companies did not pay taxes. So we may be seeing also the Japanese finance ministry's attention being reflected elsewhere. Yet the situation is pressing for USDJPY. And actually, we're quite worried about how low the Japanese currency has reached, especially against the US dollar. You can see that in order for us to find a new ultimate resistance line, we're going way, way back. Actually, we have reached, here we go, we have reached May to June 1990. We're talking about over 33 years ago. And that's a major issue. For the time being, though, I would be highlighting that that would seem like a nice peak here. I'm keeping that. It was a platform. You can see the stabilization here and then the drop, the wide drop within one day. The question that arises, though, is how valid is a resistance line that is based practically on a peak 33 years ago in today's terms? That's a big question. On the one hand, we have to admit here that practically the sellers of the time back then probably are not present now. On the other hand, though, we have to also bear in mind that market participants are going to do something similar. So most probably they will also be going back into the past in order to find any resistance lines. Okay, let's correct the labels. Starting with the S3, which is now being set at 149. And let's make it a little bit smaller. The S2 is now being placed at 150.30. Let's shrink that as well a little bit. And the S1 at 151.65. I'm keeping very, very narrow corridors between the resistance and the support lines, especially in the support lines. If we drill out to the forward chart, it will become more obvious. There we go. $149. Let's place the S2 as well. The S1. The R1 at 153. The R2 at 155. And the R3 at 156.65. Now, on technical level, we definitely maintain a bullish outlook here. That's the base scenario, at least. And that's being based practically on two factors. A, we have a clear upward trend line guiding the pair higher. B, we have the RSI indicator, which is above the reading of 70, implying a strong bullish sentiment on behalf of the market. And at this point, though, I would be issuing a warning here and for the bullish outlook, because we can see that the bulls are, or at least seem to be a little bit tired. You can see that the differentials in the upward movement become lower and lower. I would also be noting here that the price action is flirting with the upper Bollinger Band, which may exactly be slowing down the bulls. Also, the fact that the RSI indicator is above the reading of 70, which, yes, it implies a strong bullish sentiment on behalf of the market, but it may also be implying that the pair has reached overbought levels and may be ripe for a correction lower. So, for the time being, we tend to maintain a bullish outlook, yet we remain quite cautious, as once again, on a fundamental level, there's always the possibility that the Japanese government intervenes in the market to support the Japanese currency, and that would be driving USD JPY substantially lower, certainly. While at the same time, we are seeing that also on a technical level, there are a number of factors which tend to highlight the risk of a correction lower. Let's have a look at AUD USD. Okay, AUD USD has moved lower, has broken the 0.6285 support line, now turned to resistance. Yet the downward motion seems to have been interrupted. On the other hand, please note how the pair is moving in a step fashion. Note this. Then we have the first stop, and the second. It's going to be interesting to see how this will be evolving. For the time being, though, we're switching our bearish outlook in favor of a sideways motion bias, and that's the initial reaction. Mind you that the RSI indicator has risen from the deeps of the reading of 30 and has approached the reading of 50. It's actually right now at 42.7.8, which may be implying that the bearish sentiment may be fading away. On the other hand, we have to definitely reverse the role of the S1 0.6285 from a support line to a resistance line. And let's go hunting for a new ultimate support level. Unlocking the chart, going back to see more trading history. Okay, the 4-hour chart is way back. Let's drill to the daily chart. There you go. This was the lowest point for the date of, let's have a look, 4th of April 2020. We're talking almost about 3.5 years ago. Readjusting the chart, back to the 4-hour chart. Let's color this in green. And that would be the 0.6075 ultimate support line. Let's correct also the labels. Starting with the R3, which is now to be placed at 0.6605. That's correct. The R2 at 0.6510. Sorry, 15. Yep. The R1 at 0.64. The S1 at 0.6285. The S2 at 0.6165. And the S3 at 0.6075. Now we have made our assumptions on a technical level. Once again, as the price action seems to have broken the downward trend line guiding the pair, we tend to maintain now a bias for a sideways motion to prevail, possibly between the R1 0.64 and the S1 0.6285. It's a wide range, I know it. Could be narrowed somewhat, but I would prefer the S1 to remain, given that it has 1-2 peaks here. Okay, it was briefly breached here, but it was very, very well validated here. And there was a nice sideways motion between the R1 and the S1 in the past. Should the CB a bullish outlook, we would require the pair to rise above the R1 0.64 and start aiming for the R2 0.6515. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1 0.6285 and start aiming for lower grounds. On the fundamental level, for Aussie traders, I would be highlighting the Australian employment data, which are due out, if I'm correct, on Thursday's Asian session. It's going to be quite interesting whether we see a slack in the Australian employment market or an easing of its tightness at least. Should that be the case, then we may see a more dovish stance prevailing among RBA policymakers. So overall, any easing of the tightness of Australia's employment data could weaken those somewhat and lead towards low grounds. For the time being, though, I would be highlighting during Wednesday's Asian session Chinese data for October, which include the urban investment growth rate, the industrial output growth rate, and China's retail sales growth rate. Now, these measures are quite interesting for Aussie traders as well, as there have been deep fundamental concerns about the Chinese economic recovery, which seems to be facing considerable headwinds. So practical data more or less verify that Chinese factories are struggling and the construction sector is suffering. That would imply less exports of Australian raw materials towards the Chinese economy. And that could more or less weaken the Aussie. At this point, I would like to have also a small comment about China's retail sales growth rate. Now, I know that it might sound a little bit off, but the Chinese industry is also increasingly relying on internal demand as well, especially given the sanctions that were suffered in the past months, years. So That's an indicator which, in our opinion, tends to gain on importance. Should the internal demand side of the Chinese economy actually start suffering, despite not being the dominant one, it may weaken also the manufacturing sector's outlook, or at least economic activity. So that's about it. Let's have a look at USD CAD, which is also of interest. The other commodity currency, however, in reverse. Let's zoom in a little bit and readjust the chart. Let's correct the labels. Give me a sec here. Now we see practically on a fundamental basis the Canadian side of the pair being more steady. I would be highlighting here as a possible risk factor the course of oil prices. And should we see oil prices dropping, then we may see the bearish tendencies for the CAD side of the pair strengthening. That would lead or could lead USD CAD higher. On the flip side, should oil prices start gaining ground, then we may see the CAD side of the pair actually also gaining, given that the Canadian economy is a major oil producing economy. On the other hand, there are some question marks on whether the Canadian Central Bank, BOC, Bank of Canada, should be hiking or not once again. However, such a discussion is a little bit premature given that the next interest rate decision of BOC is to be released on the 6th of December. So we still have 3 weeks' time here. Locking everything in. On a technical level, allow me, actually, we haven't mentioned anything about financial releases from Canada this week. And okay, we have some medium impact financial data due out. I would be noting, say, for example, the manufacturing sales, which are quite interesting, or the wholesale trade would be also of interest. But overall, I think that fundamentals are going to be the key role behind the loonie's movement and direction in the coming few days. For the time being, on a technical level, we tend to maintain a bias for the sideways motion to continue. I would be highlighting how USD CAD has been moving in a very narrow range-bound movement for the past 3 days, actually since Wednesday, maybe even more. Let's have a look. Yeah, it's since the 7th of November, that would be last Tuesday. So we tend to maintain that, and for a bullish outlook, I would require the pair to clearly break nothing like this test here, a false break that was. I would require a clear break of the 1.3820 and the pair to start actively aiming for the 1.3975. On the flip side, should the bears be in charge, we may see the price action dropping, breaking the S1 1.3755 and start aiming for the S2 1.3640. So that should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
to another video of IronFX. My name is Emily and today we'll be looking at margin level. So what is margin level? Margin level indicates the health of your accounts. It is the percentage value based on the amount of equity versus used margin. In other words, margin level allows you to know how much of your funds are available for new trades. The higher the margin level, the more free margin you have available to trade, and the lower the margin level, the less free margin you have available to trade. A basic rule of thumb is the higher the margin level, the less possible it is for the trader to face a stop out. Your trading platform will automatically calculate and display your margin level. If you don't have any trades open, your margin level will be 0. So why is margin level so important? Forex brokers use margin levels to determine whether you can open additional positions. Different brokers set different margin level limits, but most brokers set this limit at 100%. This means that when your equity is equal or less than your used margin, you will not be able to open any new positions. If you want to open new positions, you will have to close existing positions first. Hope you found this video useful and interesting. In the next video, we'll be looking at margin call level.
Let's get started. So sorry about that. I, for some reason, could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who are finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be, or the swing lows should be, in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches, because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the fourth touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah, Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches. So 2 at the top, 2 at the bottom, and they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, top, bottom, or bottom, bottom, top, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay, so firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay? Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. When I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, your analysis would then be more accurate. Yep. I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. This Forex Factory, sorry. Forex Army. This one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Here. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the 4 Fibonacci techniques that we use. And where's the next key level that it might go? So you fine-tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area. As long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. Bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here and made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really, like, you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these three breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have 2 swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have 3 indicators, graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point 1. Point 2, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, not to worry, but that's basically where we go through all of the different techniques in detail. Mm. Hmm. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. That's so weird. Okay, never mind. I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay. So using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. That's in line with the 161.8% Fibonacci extension. Okay, and you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have 3 swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have 3 swing highs that match our descending trend, our descending trend line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there and my second resistance here, or rather my first support here. And okay, so good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level, so you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here. Or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay. So here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. Let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do we have a trend line? Okay, also no, because we have this area here. Okay, okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay. I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe okay. Yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay, RSI isn't really telling us much. Now let me pull out my, oh, yeah, exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover, that typically suggests that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind, the mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. It would be like that. Okay. Okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Okay, I'm going to put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out that, we'll see it move towards the 161.8 because the 161.8 is, or our second support is also an area of confluence. Okay, we have the 38.2 and this 161.8, along with this second support, which, as I mentioned earlier, is an overlap level. Because you swing high here, swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover. Okay, which means just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else. Yep, hi. Yeah. Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah.
swing low.
Is
How
what?
did you
Sorry.
come to that
How did I come
swing
to the
low?
first resistance?
Yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback resistance because we're expecting price to pull back to it.
Okay,
Okay.
okay. Because okay, the reason why you called it first resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so a resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean because we still have a bit of time. So we covered this last week. Um, okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay, once price break the previous low, it becomes pullback resistance.
Yeah. And then once price reverses back to that, it then becomes an overlap. So like over here, in this example here, it's a pullback. And then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah,
Overlap. Okay, once it's gone too far, it become overlap.
yes. Okay.
Okay.
Does that answer your question?
Yes, I grabbed. At least I'll further my analysis again. But I understand what you mean by what is it called?
Okay.
The first resistance. The first resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, yeah, then that's all for today.
okay, the second resistance, sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the edge of the is it the edge? Is that the edge or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for, in this case, you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes.
The first resistance, sorry.
Will be our entry, our sell entry. Oh, yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry.
How do you figure out sell in this chart?
How do I what? Sorry.
How do you figure out the chart? The market is going downward. How did you figure it out? I mean, it's
Because
going on the bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with the
yeah,
moving
that's
average.
just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
Yeah, see, I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The
Okay.
RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else again confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines. I mean here, the upper and middle bands. Right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is going to drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now.
Okay.
But yeah, those are the 3 ways that you can use RSI.
Okay.
Yeah. Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful, and I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.